Good evening. Welcome to today's Tax Talk. I'm your host. I'm attorney Stephen A. Leahy. We're going to talk about the gig economy, gig workers, and the changes in the tax laws that are going to affect them. So it's not only millionaires and billionaires that are being affected. It's just about everyone. Join us, won't you? Today's Tax Talk. It is Thursday, September 23rd, year of our Lord 2021. And we're going to talk about the gig workers, gig economy, and the changes in the tax law that are going to affect them. Again, not only millionaires and billionaires are being affected by the changes in the tax law. Actually, all of us are. And there are a lot of other stories. Right before I go on air, I always do a search on the IRS to see if there's something else that came up that's important and in the news before I come on. Hate to come on and miss the biggest story because sometimes that happens. But there are a couple of big stories that came out right at the end of the day today. And we'll talk. I'm just going to brush up on that. But we're going to talk about, do we know what a gig economy is? A gig worker. So let's first define what that is, so we have the same, so we have some common ground moving forward. So here it is. It's going to be right above me here. Gig workers are independent contractors, online platform workers, contract firm workers, on-call workers, and temporary workers. Gig workers enter into formal agreements with on-demand companies to provide services to the company's clients. And again, they're not employees, generally what we always call them freelancers or independent contractors. They'd get we talked about 1099s yesterday. And so that in that 1099 parlance was they got a 1099 miscellaneous. But as we saw yesterday, that's changing, or changed in 2020 to a 1099 NEC, non-employee compensation. And one of the changes, right, as we talked about, the IRS is trying to track those who don't have a W-2. 1099 employees were one of them. One of the ways is going after your bank accounts and trying to have your bank report your income, or everything that goes in and everything that comes out of your bank. As I mentioned, that had reached a impasse in Congress, and they took it out of the bill. But today they put it back in. But we'll talk about that later in the show. First, I want to talk about this article about gig workers and how this is changing. Right, it's going to change the way they are taxed. Usually, I always say people that are these gig workers, they don't realize that they pay the most in taxes of everybody, because their employer is not paying half of the Social Security or half of the Medicare, right? They're paying it all. And this means you're paying more taxes than anybody else. If you're an employee, you're not getting the same amount of money. You're not paying as much. And I don't think people realize that when they get into these, Uber or all these other shopping companies and all these other temporary 1090, what we call 1099 gig workers, as they're called now, gig workers, because they're doing a gig, musicians, all of this. And there's a very good article. So let's look at the article. So gig workers to get hit with big tax surprise next year. Okay, so we keep hearing, don't worry, it's only against if you make more than $400,000. Well, there's very few gig workers that are making $400,000 a year, and yet they're still going to be hit. But this is where I was talking about yesterday. It's not an increase in tax rates, right? We're not taxing you more. If I pay more in taxes, I'm I'm paying more in taxes. And so it doesn't really matter if it's the rate or some other way that they come to make me pay more. So anyway, Detroit bass player knows too well about the widely varying rhythms of the gig economy. He has been a musician for 24/7 for the past 21 years, working on solo projects and playing over the years with groups but he saw his bookings crash for roughly a year during the pandemic. Well, that's almost everybody in that economy, right? There was no bands, there was no place to go, bartenders and all that took a hit. But he saw his bookies crash. The first few months were particularly frustrating because he was doing 60, 80 shows a year before the pandemic, and now it came to a halt then with the pandemic. I didn't start gigging again until 2021 in April. Here's the gentleman. More work, including playing his bass guitar one September evening at members-only craft cannabis club in Detroit, picked up as vaccines became more readily available. One thing the pandemic should have taught everyone who is a gig worker, musicians, dog walkers, delivery drivers, you name it, is that you must keep good records. This is almost everybody who's in business for themselves. And as I mentioned, I have a lot of clients, doctors, lawyers, financial planners, many, name the industry, and I have clients. And they always say they're very good at what they do. They just don't keep good records. And they don't like to get involved with, and then once they fall behind 1 year, then it's 2 years, then it's 10 years. And it happens overnight, seemingly. Same thing here, right? If I'm a gig worker, if I don't keep any records, well, guess what? I don't get any deductions because I don't have the proof of it. One thing, so keep records, mileage, expenses, income, all of that, right? It's the little things like that we musicians or gig workers don't know. He said he knows musicians who faced more problems when they did trying to collect unemployment because many didn't keep records. So if you can't prove I was unemployed or how much I made, very difficult to collect unemployment. Even though they allowed independent contractors to collect unemployment, it was based on some proof of what you were making beforehand. And many don't, and this is what this story is about, right? Is that many don't report some of the money that they collect. It's very much like companies, would it be liquor companies or restaurants? We've all heard restaurants keeping separate books and then trying to sell your business. You can't sell it if it's not on record. You're not going to get the value for that business. Rightfully so, because you can't prove what's in there. Okay, now let's see if we can get this. My page is unresponsive. So he studied accounting and finance and even made a 7-minute video in April 2000 to help younger musicians learn how to seek financial assistance and better understand why they need to pay attention to taxes, keep track of income, and record expenses. Again, this is big because what you have to realize is that as a gig worker, you're independent. You're working for yourself. You're a small business. And there's ways for you to cut your tax bill down. I know you think, well, I don't really make enough to do that. But in fact, you do. And you should probably take lessons from this gentleman about that you should keep good records and that you might be able to structure your business. Maybe you should incorporate. Maybe you should come up with some other viable alternative to just reporting everything as income, because some of it's not, right? Because you have to, there's many expenses that are involved that you may not even realize are deductible and can cut your income down and therefore your tax bill. I try to be the squeaky wheel in my circle of people who are phenomenally talented, but they don't know anything else. That's what I just said. They're people that are very good at what they do. They're just not very good at keeping records, and so they don't keep good records, and that's a problem. They don't recognize how many things they can actually write off. The paperwork is needed at tax time. You need to get a good accountant. Very good advice. You should have a good accountant, not just to go to your tax preparer, someone that understands businesses. And of course we do that here at Open Tax Advocates. But again, whether you hire us or hire somebody, you should hire some good accounting firm to give, not only to do your tax returns, but to give you good advice about what is deductible, what is not deductible, how to structure your business. These are things you should know. The downside of picking up extra gig work is that your tax bill might be way higher than you'd imagine. Many times people don't set aside cash, pay taxes as they make money, or even know the complicated rules when it comes to income tax obligations. Well, that's always the case, and it's the same for small business people. No matter what, whether you're doing a gig work or I'm making donuts or whatever it is. I'm a plumber, and I used to be a plumber for someone else, and now I hire myself out as a company for plumbing. The downside of picking up, okay, so not very big. They're not. My computer's not being very responsive today. Next year, many gig workers will be shocked at tougher tax reporting standards go into place and greatly expand how many 1099Ks are issued to those who make extra money in the gig economy. We talked about it yesterday. What's a 1099K? Right? These come from these. Well, let's find out. While workers should report their income, experts say much taxable income falls through the cracks and goes unreported. Now, in cases where there isn't a 1099, right? So if I had just done a gig for somebody and it's less than $600, that person is not, or the business is not required to send me a 1099. And so if I'm going to different gigs every week with a different venue, right, they're not paying me $600, and so they don't have to give me a 1099. And so they're not reporting it to the IRS. And so some people don't, they might forget, or whatever the reason, they don't report it all to the IRS. While workers should report their income, on-demand workers can work in entertainment, drive cars, rent property, freelance, sell goods online, rent equipment, and provide creative or professional services. What's happened is that the IRS was focused on W-2 economy and created a system that matched W-2s and 1099s and never totally focused on cash-based gig economy, such as we are moving toward now. And that's true. I mean, this is fairly new, it's a fairly new phenomenon that people are doing these gig works because technology allows it. And so people are taking advantage of it. What happened is that the IRS, so they are playing catch up, trying to figure out how to raise compliance. Matching payments from payers is their best strategy. Okay. Well, this is. In general, many people may be familiar with Form 1099 Miscellaneous. That's the form that almost all independent contractors got until this year, 2020, for the 2020 tax year. They got it this year in 2021, the NEC, the 1099 NEC. Said that 1099 MEC is still used for things like rents, royalties, prizes and awards, medical and health payments, and payments to attorneys. Fantasy sports players, for example, can receive a 1099 miscellaneous when they win money. Most leagues will report you, right? But those who work in the sharing economy are often seeing new tax form known as the 1099 NEC. Again, we talked about that yesterday. Even if you do not receive a 1099 NEC because you earn less than $600, you're still required to report your earnings. Okay, so under the current federal income tax rules, if a person is paid electronically by credit card, debit card, or third party, such as PayPal's, those payment networks will be required to issue a 1099K when the taxpayer is paid at least $20,000 or more, or has more than 200 such transactions. But the threshold will go way down in 2022. So again, the threshold now is at not sure what happened there. That was a Detroit Free Press. Very good story. Anyway, it's gone way down, and it was $20,000, right? And now it's going to be $600. That's right. So it used to be 20,000. So now if you make more than 600, so if you get PayPal, they pay you 600. They're going to report it over the course of the year. So if everyone that you're doing business with is paying you through Zelle or Venmo or some other one of these third parties, now they're going to be required to give you a 1099-K at the end of every year in order to track your money. That's really what it's about, right? So they're saying we're all cheaters and liars, and the IRS wants to be able to check all of our bank accounts and any other way we can get paid in order to make sure we're paying our taxes, right? So if you had been not reporting some, maybe it fell through the cracks because you weren't paying attention, and it was to your advantage not to pay attention. Now if you don't report it, right, the IRS is going to be coming after you because they're going to have a record of it. As those working in the sharing economy, receive more 1099s, they'll be stuck reporting more of their income. The change will be felt by many, including those who pick up extra money by working for app-based companies and those who sell items online at spots like X and eBay. According to IRS tax gap studies, I keep talking about the tax gap because they keep telling us about the wealthy and the tax gap and crypto, right? The three boogeymen. And the tax gap is the problem, is all of our problems is because of the tax gap. Even though we've always had a tax gap. It's nothing new. They keep telling us it's getting bigger. I find that hard to believe as technology for tracking people has gone up. How could it have gone up instead of down? It's estimated 63% of income is misreported when third parties do not provide information to the IRS, such as a 1099-K, according to the IRS. So we're all cheaters and liars. Not sure what's going on with that computer, but I wanted to. Now, there's a couple other good stories out there, and I just wanted to talk about the headlines. So there's the IRS they have private collection agencies. A couple of years ago, they allowed some private collection agencies. Some of the cases went. They tried this some 10 years ago. They found out that they got less back from these agencies than they paid them. And so it wasn't economically feasible. But they tried it again a couple of years ago. And so now the IRS has signed 3 new collection agencies. Actually, there's only one new one. 2 of them are the same. And a third one, I can give you their names, but it's not that important. When you get the letter, you'll know, right? Because now here's something I want you to know about collection agencies, the private collection agency companies. Here's what I want you to know about it when it comes to IRS collections. They don't have the power to garnish your wages. They don't have the power to levy your bank account, these collectors. They have the power to harass you on the phone. And that's really it. So I want you to understand that. And when you pay them, you never make a check payable to those collection companies. The money goes to the IRS. Now, they're very limited in what kind of program they can get you in. So if you're trying to, if you could pay them a 100%, they can do that. If you're trying to do an offer in compromise or what they call a partial installment agreement or to get declared currently not collectible, they won't be able to do that for you, right? So that you have to go back to the IRS, and you have a right under the IRS policies to take it out of the private collection agencies and put it back with the IRS where you can have a better deal. Right, because again, they can't give you, these companies don't have these options to give you these other options that the IRS has to pay less than what you owe, right? So one more headline I want to talk about, and that headline is the Democrats agree to slim Biden plan giving IRS bank account data. So as I mentioned, for bank account data, the level was at $600. If your bank account had more than $600 in activity in 1 year, then you were subject to this handing over all your data. Today, they've put it back in the bill, and they agreed to raise it above $600. How much more? I don't know. I can't find that information out. But when I do, I certainly will report that data to you, and because I think it's important. But they were at $600. Let's say they go to $10,000. Will that change anything? Probably not. Most people still do more than $10,000 in their bank account. And so it's not the amount that I object to. It's the fact that they're getting it. That's the objection. To me, it's a Fourth Amendment issue. And it's definitely an issue with the Financial Privacy Act that's now active in America that protects our data from the government. And we would be surrendering those rights. And that's what I'm against. I'm against that, surrendering those rights. One more short story, and this has to do with, again, billionaires. They're trying very hard to make the billionaires and millionaires. As I mentioned, we just saw the tax gaps story. This is the tax gap. We need to do this to put the tax gap down. So now this is from the White House. Billionaires' income taxes are a tiny fraction of what they make, White House says. Here's the average rent they pay. And then they come up with the top 400 families, and they say their tax rate is 8.2%. But that's just not true. Attorney Leahy, how can you say it's not true? Why would the White House say it if it isn't true? The way they calculated how much they pay, and they did this earlier, and I've called them out on it before. What they did to get that 8.2%, they didn't look at their income. What they looked at is their assets and then the growth of assets. And then they included that in it to come up with the 8.2%. In the largest, if you use the right one, they're at 26 to 30% effective tax rate of their income. But and this is going to get a lot of press, I know, because people are going to be angry when they find out that the wealthiest people only paid 8%. And yet I, who am just a regular guy, am paying 20% or 25% or more, right? And so it doesn't seem fair. But the calculation is false, right? They're not using their income. They're using their wealth, the value of their assets before sale. Here in America, according to our tax code, now this is not something that's new or something that's unusual. We only tax when you sell a piece of an asset, like cryptocurrency, right? So if I buy cryptocurrency and I hold it and it's gone up 100 times, I don't pay taxes on that cryptocurrency until I sell it. Then I pay a tax on the capital gains when I realize a gain. And that's the way we tax things in America. So now that can change. And of course, I think they're trying to change that. I would be against that because it's very difficult. Again, it would be another reporting nightmare to have every year I have to value all of my assets and come up with a market value and include that in my tax return and then pay a tax on all that money that I never even got. And by the time I sell it, it might be down a lot. There might not be any money there. So I'm paying tax on something I don't even have and maybe never will have. They're also trying to change the way that assets are valued when someone dies. So if I die now, and so let's say I had a piece of property that's worth $500,000 today, and my basis, so when I bought it, I only paid $100,000. So now there's a $400,000 gain. When I die, my heirs take that property at $500,000. So the IRS, in their eyes, are missing that $400,000 in taxes that they'll never get. Now, let's remember that the person who died paid taxes on all that money. And so the IRS is not really losing anything. It would really be double taxation. And that's what they want, right? They want double taxation. So anyway, that's what's going on in the tax world today. Remember, I tried to share with you all the tax information so you don't have to. Most people aren't that interested in taxes. So I try to highlight, although we all have to live with it, right? So I try to highlight the important news for you. So you can catch us here every night about Monday through Thursday at 6:15. I do the radio show, the IRS Radio Hour, and the Trust Radio Network. I do it live streaming on Friday afternoon around 2 o'clock, 2 to 5, something like that. So join us every Friday there. Join us here every night about 6:15, Monday through Thursday, where I can tell you all the tax headlines. Now, remember, if you're fighting the IRS, if you're fighting them alone, get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. Get your free copy of Free IRS. Go to freeirsbook.com. And one more thing, remember, I'm going to ask you to like, subscribe, and share this information because I think everybody needs to know this. You know gig workers. I know gig workers. So we need to get this information to them so they can start keeping the good records and pay less taxes. Right? There's ways to pay less taxes. Take advantage of those ways. So anyway, thanks so much for joining me here today. I appreciate you taking the time. And let me see if I can get this up for us so I can close out the show because that's what I'm trying to do. Okay. Maybe we'll close out. So thanks so much again for joining us. And we'll see you. Remember now, watchtalkradio.com. If you missed an episode, we're there on watchtalkradio.com. It's there after every night. It's also on Facebook and YouTube. But go to watchtalkradio.com and you can find every episode. So thanks so much. And I look forward to sharing more tax news with you again next week. See you later now.